Hey everyone, and thanks for jumping back into the Cryptoverse. Let's go live and see what's going on here. Sorry, I'm just getting things set up. All right. So, let me see if I can share my screen. All right, here we are. All right. Let's see if there's a better way to do this. I think maybe that one's the best one. All right. So Bitcoin has fallen back below 100K. I want to talk a little bit about the ramifications of this. Have we seen this kind of stuff before? Is this normal? Is it not? What would you want to look for to give you some indication or evidence that it's par for the course or something different, right? That's what I really want to do in this video. The first thing we'll say is that one of the outcomes that we discussed was a potential rally into January 20th, Inauguration Day, followed by a sizable pullback. Because then the argument is, well, now that we've priced in everything good under the sun, do we actually get all the good things, right? Now, hopefully we do. But you have to imagine that you're pricing in sort of all this deregulation and a strategic Bitcoin reserve and all this great stuff, a soft landing, right? Does that actually happen? Now, hopefully it does, but it doesn't mean the market's not at least going to ask the question to try to figure out, is that what's going on? To some degree, I think, you could argue that we're seeing a lot of de-risking right now, due in large part to what's going on in the equity markets, right? I mean, Nvidia is down 17% today. That is that's not a small number, you know? I mean, you don't often see Nvidia drop that much in a single day, right? I mean, this is down 17% right now. So to some degree, when traditional markets correct, obviously, crypto is generally going to have a correction on par, or if not worse than what happens over in traditional markets. Now, at the current time, the S&P is down about 2% today. Um, One of the things I want to talk about is, is this normal or is it not? Right? And there's two there's three ways we're going to look at it. Probably more than three, but I'm just saying three for some reason. Uh Someone says the sound's breaking up. Is the sound not okay? Can you guys hear me okay? Oh yeah, it looks like some people are saying they don't have sound. Oh, okay, we got people saying sound is okay. So, they say good sound, loud and clear. We're good. All right, so the sound's fine. So, I think the first thing to look at is give us some historical context, right? Give us some historical context. So that's what we'll do first. So the first thing I think it always makes sense to do is to just go back and look at the market cycle ROI of Bitcoin, right? That's the simplest chart to look at. It's the easiest chart to look at. Um, it sort of like keeps us in check when the market gets too heated, like it did back in March. It allowed us to say, you know what, market's likely going to go down for 6 to 9 months before picking back up, and we called that a mid-cycle top, and it did, right? The market went down, and then eventually it picked back up. And now let's just look at this cycle compared to 2 cycles ago. It still generally looks okay, right? I mean, at this point, it still looks okay, right? It doesn't really look that bad, even though it feels bad. It doesn't necessarily look that bad. Um, I guess the counterpoint is that Ethereum, you know, looked like it was tracking once upon a time as well until it wasn't, right? But even then, even after it wasn't, it still did take out these highs eventually. So on one hand, it feels kind of bad, right? I mean, Bitcoin was at 109K last week. Now it's at 100K, right? So on one hand, it feels really bad. On the other hand, you look at market cycle ROI and you're like, well, this is kind of exactly what it normally does. So in that sense, things don't really seem from the market cycle ROI perspective, it's like, okay, it's a Monday, right? It's a Monday. Stock market is spooked. Nvidia's spooked because of what's going on over in China with the AI stuff, and you know, perhaps that's all it is, right? The other way to think about it is to look at seasonality within each cycle, right? And what I would say is go back and look at January of 2021, and you'll see there was a 30% drop, right? Really about more than a 30% drop. And if you look at 2017 in January of 2017, right, the post-halving year, there was a 35% drop, right? So it's not uncommon for Bitcoin to get 30% drops that start in January of the post-election year. Now, I understand that a lot of us are it almost feels like we can't even remember what a 30% correction looks like. And you might be like, "Well, what are you talking about? Bitcoin just had a 30% correction last year." You're right, it did, but only if you measure it wick to wick did it have a 30% correction. If you measure it from like daily close to daily close, it was only about 20%. One of the interesting things about that is if you look at the days, the number of days since Bitcoin has had a 30% drop, we're at 811 days. The last time, the last record that Bitcoin had was 430 days from daily close to daily close. This is, you'll have to forgive people for not thinking it can't happen because it hasn't happened in like 2.5 years, at least not measured on daily closes. So you kind of get why it's sort of like a taboo thing to talk about, right? It hasn't really happened in years, therefore, like, why talk about it? Chances are it's not going to happen, but I would point it out there. And just to give you an idea, like, where would a 30% drop put Bitcoin? It would put it around 75K. Right? It would put it at 75K. Now, for me, when I look at this chart, to some degree, like there could be an example of people getting, hysterical before. I mean, again, like the price of Bitcoin is the same price as it was last week, and basically the same price it's been for the last 2 months. So to some degree, some of the fear could be misplaced. But on the other hand, if you actually look at the 2017 correction, and there's been a lot of comparisons between this cycle and the 2016-2017 cycle, if you look at that correction that was a 30 something percent drop, it actually retested the 2016 high, right? So it actually tested that 2016 high on the early post-halving year drop. Now, what's interesting about that is that the prior 2024 high is around 73K, right? Which is pretty close to 75K. So if it were to go back down there, that would be equivalent to about a 30% drop. One of the things that we've mentioned a few times is that, it's easy to make this comparison to last year, right? Easy. And maybe that's what we do, right? Maybe it just sells off here, sweeps the low again, and then we rally in February. That's what happened last year, right? Let's maybe hope that that's what happens. But from a macro perspective, right? From a macro, yield perspective, you'll remember that when the 10-year yield was breaking out over here, right? When it was breaking out in 2023, Bitcoin had this move where it went up, sideways, and then down. And it basically just returned to where the pump began. And then it had to consolidate for another 2 months before it had enough in it to actually make a move to a new cycle high. So, you have to at least consider that scenario where it doesn't do the same thing. Like if the 10-year yield, were to find support here and put in, say, like a higher low and get another rally, say back up to 5%, that could be a reason for Bitcoin to sort of sell back off, go down 30% and retest the prior high from 2024. That's actually exactly what happened in 2017, right? It tested the prior high from the prior year in the early part of the post-halving year, and then it got another rally. So this is my thinking on the market right now. This is my thinking. I think even if Bitcoin went as low as 70 to 75K, the market cycle could still theoretically be intact, right? That would be a normal cycle to get a 30 to 40% drop. In fact, every post-halving year, we get 30, 40, 50% drops. Even in 2021, we had a 50% drop, right? Almost 60%. So if it were a 30 to 40% drop, then I would argue the cycle could still very much be intact, right? It's not like the whole thing has to necessarily be derailed. If Bitcoin can find support either at the current levels or as low as 75, 73K, right? Support there seems like a normal cycle, right? And it would still be similar to what happened in 2016, where Bitcoin had that type of a drop, right? It broke out and then it came back down to the prior yearly high from the halving year, right? From the halving year. And after it tested that as support, it then had another move up, right? So it would basically be like, coming back down, testing it as support, and then having another move up. If it's like that, I would say cycle remains intact. Nothing has really changed. You have to remember, if there is a drop in the market, it would likely be a reason for the Fed to quickly reverse course, maybe to end quantitative tightening and to start back the money printer. So you always have to remember that is one tool that they might try to throw at the market, especially if the labor market data continues to weaken. Where things could get problematic is if you get a drop larger than 30%, right? If you get a drop larger than 30%, then it might imply something's different, right? And it could be, it could mean sort of back testing this lower high structure, right? Like if Bitcoin were to go back and back test that, I think it's still possible that the cycle is still intact, right? If it were to go that low, back to sort of the low to mid 60s, it's possible the cycle would still be intact in that scenario. But um I wouldn't know. The reason why this would likely act as support is because that's actually right around MicroStrategy's average buy for Bitcoin. So yeah, I would think that if it were to drop that low, you could still have a continuation of the bull market. But I think the main thing I wouldn't like about that, about it going that low, the main thing I wouldn't like about it is it would actually still mimic the QQQ, and I'm trying to look for reasons to fade the QQQ analog. The QQQ analog is something we've talked about since March of 2024, and it essentially goes something like this, right? That the QQQ after the ETF launched in 1999, it rallied for exactly 54 weeks, and then it got a correction down to 63, right? Coincidentally, 63. And note that this analog is already starting to deviate some because it actually went up to 120 54 weeks later. Bitcoin did not go to 120, it went to 109. So you could argue the analog is already starting to break, which could very well be a good thing. I don't really think at this point in the cycle you want the Bitcoin to track the QQQ, because the QQQ, what it did, it rallied from 48 to 120 and then had a 2.5 year bear market, right? I think it'd be good to look for reasons why Bitcoin is deviating from the QQQ. And so the problem that I would have is if Bitcoin were to drop back down to that lower high, the lower high structure from back over here, if it were to drop that low, go back to 63, it would just look too similar to the QQQ, where like it could still bounce back up to 100 like it did by the third quarter of the year, but you might end up just getting a left translated cycle where the peak occurs a lot earlier on. Now with Bitcoin, we are really fortunate because we have had so many cycles where we have had right translated cycles where the peak occurs in Q4 of the post halving year. Now, I think that is the ideal scenario where the market cools off and then you get another rally into Q4 of the post halving year. But you have to remember there are cycles that precede the cryptoverse, in which case you had left translated cycle peaks where the peak occurred in the early part of the post election year or even in the election year, right? If you go back to the 1970s, you can see a normal right translated cycle right here where the peak occurred about 1 year before the cycle bottom. Then the cycle after that was a left translated cycle where the top occurred in December of the election year. And then the next top occurred in January of the post-election year, which is right around now. In both of those cases, when you had a left translated cycle, you did have a big drop in Q1/Q2, but you still had a sizable rally at some point that marked a macro lower high. So at this point, I don't think any of us could possibly know if it's going to be a right translated cycle or a left translated cycle. I think a lot of us would prefer a right translated cycle because let's just keep the party going on for as long as possible and we'll deal with the bear market in the typical midterm year 2014, 2018, 2022, and 2026, right? That would be the ideal scenario. So then it raises the question, well, what caused left translated cycles in the 1970s? And I think you have to just simply look at things like the macro data, right? If the unemployment rate is moving up quickly, that can cause a left translated peak. Or if the inflation rate is moving up quickly, that can cause a left translated peak. So the reason we talk about these macroeconomic drivers is because we know that if inflation starts to accelerate too much, or if the unemployment rate starts to accelerate too much, it could lead to a left translated peak. So that's why what Powell is doing at the Federal Reserve, it's very imperative that they try to finagle a soft landing so that we don't get a left translated peak. I know that stuff might be boring, but that's the reason we talk about it, is because it could affect the overall market cycle. So, when I look at the market right now and I look at what Bitcoin's doing, yeah, I mean, it's back below 100K. I have to imagine if in 20 years someone told you, hey, the president of the United States launched a meme coin, why didn't you think there was something wrong and the market was going to get a correction? It would probably all seem kind of obvious, right? We've talked about, these scenarios with the 10-year yield breaking out and the comparison, sort of that move right there. If Bitcoin were to give back its post-election result gains, it would actually be doing the exact same thing that the Russell and the S&P already did, right? If anything, Bitcoin has held up better than the Russell and the S&P 500. Because if you look at the Russell 2000, the election results came in right here. The Russell already swept that low, right? Even the S&P 500 went back down to nearly where the results came in on election day. The things that haven't, I don't think the NASDAQ did, right? The NASDAQ didn't, and Bitcoin didn't, right? And maybe the altcoin market collectively did not, because it would be all the way back down here. So out of all of them, Bitcoin has been doing the best, right? It's further away from the post-election or the pre-election price than in terms of percentage when you compare it to the Nasdaq and when you compare it to the S&P and the Russell and even probably the altcoin market. I don't know if that's true, so let me check. Let's take it from the week here, November 4th. Bitcoin is currently up about 45%. Now, if you look at the altcoin market as measured from November 4th, is it up more? It might be up more. It is up more, right? So the altcoin market is up more, 66%, right? Now, here's the thing. If Bitcoin were to drop, you would likely see the altcoin market drop more because quantitative easing has not yet started. But whenever quantitative easing starts, I would argue that on future Bitcoin drops, the altcoin market might actually drop less than Bitcoin on the other side of quantitative easing, right? But we're still in the QT phase. So for now, I still think it makes sense to think if there is a drop, you could still see Bitcoin not drop as much as the altcoin market. There is a Fed meeting in 2 days, so keep an eye out for that. Obviously, things could change relatively quickly if the Fed makes a big pivot on that day. But again, I mean, in the short term, this is nothing at this point. It's still the same price that it has been for the last couple of months. We talked a little bit about how if it is to even mimic last year, you wouldn't even necessarily expect a rally until February, right? And so one of the things you have to remember is that Bitcoin does this thing where it puts in a high and then it kind of comes back up to that high around the labor market results. And it's done it many, many times. And so you have to wonder, is it just doing the same thing where it's got a nice rally, but now we actually have to wait until the labor market results next week to figure out if the rally can continue. Remember, when Bitcoin was fading in 2024 and it was putting in that lower high structure, it was actually while the unemployment rate was going up, right? The unemployment rate was going up consistently, and that was causing Bitcoin to fade. The minute that the unemployment rate stopped going up and instead started consolidating, Bitcoin used that as an opportunity to break out. Remember, the market does not need a reason to go up. It just goes up because people buy risk assets. It needs a reason to go down. And you can see that like today, Nvidia is down, you know, 17% or something crazy. Now it's not as bad. Right now it's 14%, but or 15%, but it's down because of this news, I guess, out of China, right? And people worrying about, well, have they, is it as difficult, or does this infrastructure really need to be there? The same level of infrastructure, does it actually need to be there? And I think it's that fear that's causing, some of that fear that's causing the market to sell off. But again, normally the market does not need a reason to go up. It needs a reason to go down. Obviously, today, Nvidia has that reason that people are worried about. The same reason doesn't necessarily exist for Bitcoin, and maybe that's why it's been holding on a little bit longer. But I got to be honest, guys. I mean, in 2017 and in 2021, I remember these early post-halving year corrections, right? I remember them. And I remember thinking like, well, is that it? Is there going to be more? And what ended up happening was there was a shift in how the market behaved, right? We went from, sort of Bitcoin dominance being the sort of the main driver, and Bitcoin leading the bull market, to then other things starting to outperform Bitcoin as the post-halving year continued. I think the conundrum for this cycle is that we never really had a reason for QE to start. And so because we never had a reason for QE to start, Bitcoin dominance never really stopped going up, right? You can see that. Like, Bitcoin dominance has never really stopped going up, but I think it's because QE never had a reason to start. But QE doesn't have a reason to start until there's something that spooks the market. So it's sort of a catch-22. It's like people want to front run alt season, but how do you get alt season without QE? But you don't get QE without something scary happening in the market. So it seems to me like at some point there will be a transition where the behavior of the asset class changes, where altcoins start to outperform Bitcoin, but we haven't seen that yet. And until there's a reason to start QE, you might simply see Bitcoin continue to outperform the rest of the asset class, right? So again, a lot of things to consider. I don't have a crystal ball. I'm trying to outline these different scenarios and talk about them, just as a way of saying, look, it's important to know what the possibilities are. I've been through cycles before where I've been very deterministic about things, and sometimes I wish I'd been less deterministic about things. So I think in this case, I think in sort of the case we're in right now, with Bitcoin sort of selling off after the inauguration, I think a lot of it just has to do with wondering if all those good things talked about are actually going to happen. I would say that if they do happen, there's a good chance that Bitcoin will likely pick back up, right? If they're all just empty promises and they don't actually happen, and inflation starts to pick up, or the unemployment rate starts to pick up, then we could have a deeper correction. But just remember, even going to like 75K or something would be, very similar to what we've done in prior cycles, right? It wouldn't really be that different from what we've seen historically happen. If it goes lower than that, that's where I think you have to start wondering, is the cycle doing something a little different than normal? But until that actually happens, it seems like, why worry about something that hasn't even happened? And even if it does happen, you would likely get sort of a macro lower high like you normally get with those types of cycles that Bitcoin's never actually experienced. So I think the other thing to think about is ETH. ETH has struggled here. And one of the things that we've mentioned before with these sell-offs that ETH has had, they've always occurred within a few weeks of a rate hike by the Bank of Japan, right? The Bank of Japan raised rates in March. ETH had a sell-off in April. The Bank of Japan's raised rates in July. ETH had a sell-off in August. The Bank of Japan just raised rates last week. Is it going into a sell-off in, say, like February, March? If it does, I think that would actually be a really good opportunity for Ethereum, one that has eluded us for a long time, primarily because ETH Bitcoin never really convincingly bottomed out. I think the reason it never convincingly bottomed out is because QE never returned. This is the puzzle, right? I mean, it's a puzzle. How do you solve the puzzle? This is the puzzle, right? If you're an ETH maxi and you're wondering what the hell ETH Bitcoin is doing, It's this, right? ETH Bitcoin never had a reason to bottom because QE never had a reason to start. QE never had a reason to start because risk assets like Ethereum never went home, right? If the degens let it go home, maybe ETH wouldn't be so damn allergic to 4K. But because it never went home, it's allergic to 4K. It struggles anytime it gets up there. And then now it's starting to get this correction again. So I would argue that if there is a deeper sell off in the market, and it's sort of market wide, and ETH does go down and put in one final lower low, I think it would correspond to the Fed finally have a reason to start QE, allowing ETH Bitcoin to start to go back up, right? But again, it's how does the puzzle actually come together? How does ETH outperform Bitcoin if you don't have QE? It's not, right? But how do you get QE if the market doesn't sell off? We haven't. And now it's post halving year and we're still in quantitative tightening. So these are the pieces of the puzzle, right? Both sides, right? The bulls want ETH to break out. The bears want it to go down. I'm over here just looking at the ETH Bitcoin pair and saying, guys, I said 3 years ago it was likely going to go to 0.03, and now it's here, and everyone just keeps dunking on it. I think ETH Bitcoin is going to bottom out soon, but I think in order for it to convincingly bottom out, you need a reason for the Fed to start QE. How do you get that reason? One way you could get that reason is if the S&P gets a correction, right? In fact, we've talked a little bit about this. If you look at the S&P divided by M2, this is exactly the level that got a correction, a 20% drop in 1998. And then I bet a lot of people thought the cycle was over, and then it got a massive rally out of that, and then we got a recession, right? So a lot of times when you think about recessions, people think about, like, well, it's going to be like a 50% drop because that's what happened to the dot-com crash. That's what happened to the financial crisis. But remember, that's not always true. In fact, if you look at the recession that we got in 1990, it was just a 20% drop, right? Like it wasn't all that bad. When you sort of account for what was going on. And what's really interesting about that 20% drop by the S&P back then is that it actually looks really similar to the ETH USD chart today, where you have sort of like a triple top and lower lows, and the final low occurred into a very brief recession. I imagine people thought it was over, and then the market just picked back up and kept going, right? So you have to have a plan. Don't be fearful if something like that happens. It would be a huge opportunity, right? Like if ETH drops to a lower low compared to the last year, I think that would be an amazing opportunity for Ethereum, just like it was an amazing opportunity for the S&P right there in 1990. The problem is I don't know if it's going to happen, and my views on ETH USD have largely been off base. My views on ETH Bitcoin have been correct. Views on ETH USD haven't been nearly as correct because I would have already thought ETH USD would have gone to that lower logarithmic regression trend line. One of the reasons why I think ETH Bitcoin has struggled again is because ETH never did go to the lower logarithmic regression trend line, right? It never went down there, but Bitcoin did. That's the key thing. Bitcoin did go down there. If you pull up the Bitcoin chart and you look at the logarithmic regression trend line for Bitcoin, it did go down there, right? It went down to the lower logarithmic regression band. So I think the reason that ETH Bitcoin never started to go up was because QE never started because these risk assets never had a convincing sell-off that made the Fed feel like they actually had to pivot. And until the Fed has to pivot from quantitative tightening to quantitative easing, you could argue that the status quo or just remains unchanged. And I think that is sort of the relevant way to think about the market. And guys, if you look at US interest rates minus the 2-year yield, you'll actually see that it's doing the same thing it did in 1980 to 1989, right? Where it hit this area up here, got a sell off, and the S&P got a brief correction during this brief recession, which is kind of where we are right now. And then the S&P bottomed very quickly and then continued to go up. So there's always a chance that something like that happens. All right, I got some people here. I got to get going. Got some people trying to fix the our heater. Our heater went out a while back, and I haven't. It's been so cold in the house, so I unfortunately have to go. But I would continue to watch these things. Look at what happened previously in the post halving year, knowing that these corrections are fairly normal. If it is just a 30% drop, it's more or less the same thing. If it's more than that, then you run the risk of a different type of cycle. I think there's likely going to be a drop at some point. People are going to freak out. Then the Fed starts QE, and then it kind of delays things for a while. They kick the can down the road, and then eventually you get a larger drop, probably sometime out in 2026. That's what I'm kind of thinking right now. We'll see what happens. Thank you guys for tuning in. Make sure you subscribe. Give the video a thumbs up. I'm sorry I didn't have a chance to answer your questions today. I'll try to come back on some other time, but I will see you guys next time. Bye.